Todd Shaffer, everybody, manager of research for VectorVest, probably most in the blogosphere for the Successful Investor course and coaching attached to that, but you'll see me around. So glad to be with you today. My approach, I like to usually kind of tell the backstory of my approach because I think the most helpful things for me have been understanding people's thinking. So when I approached this list in this economic environment, the thing I'm most concerned about is the company's ability to continue to generate income, sales, right? So the first thing I did was I took this list and I sorted it by sales growth, and I made sure that we at least had positive sales growth numbers, right? Look at Jim's pick up at 238% sales growth numbers. Way to go, Jim.
Thank you very much.
So from that universe then, I started looking at graphs. And let's just start with my first choice, alphabetically, Chem Med. And let me bounce back over to the graphs. My first pass, if I can find it, because of this price action, I'm looking at a one-year chart, and I'm looking for bottom left, upper right, smoother the better. I just don't have a lot of perspective here. There's a lot of these graph patterns that kind of congest and move sideways through the end of 2019. So I actually opened it up to a 5-year graph instead. Now I'm looking for continuations. Now I'm seeing bottom left, upper right, smoother the better, driven by price and earnings, right? And now this anomaly is in perspective. It also shows me there's some really significant support here at about 316, which just happens to coincide with a retest on this most recent pivot, right? So doing multiple time frames can really help you in your analysis of any particular stock. So by the numbers, and I guess I won't go back to the stock viewer just to cook the numbers here to show them, but we've got an earnings growth rate of 15%. This does have a dividend yield of 0.65% and a safety score of 98. And the sales growth on this particular company is at 7%. All right, so they did have an earnings beat. In fact, all of my picks had earnings beats in this most recent earnings season. And you can see just here how the price is coming back to retest the moving average. So let me go back to the one-year graph. We'll get a little bit better time frame here. We're in this consolidation, which we've seen so many times. Our strong support was down at this pivot low, right? But you can see in this consolidation, kind of a carryover from where we were the end of 2019. Boy, I sure would like to see the breakout here, right? But I have enough headroom, particularly if I can break this 50-day moving average resistance. Give me some signs that the market, that this is starting to resume with the market. And I'm far enough away from that resistance level. I can't read the numbers here. 425 versus 460-ish, that I have some headroom, right? If I take the position on, even if I scale into it, before I come back for the retest of resistance, I can start building up a position and still be sensitive to any reversal if this channel holds. Remember, I'm buoyed by being in a company that has strong earnings. Now these guys are in an interesting little place. ChemMed it's a diversified company because it has two main holdings. One is in a palliative care or a hospice care company, and the other holding in Roto-Rooter. So you might see some spin-off opportunities of, I'm guessing, the Roto-Rooter, since the growth seems to be in the Vitas company, which is the hospice care play. All right, but that's my pick here. Just look for that clean entry. Or, to Jim's point, take the entry and then just build the position with some option trades to protect it, and you can do just fine. All right, second pick. Let's go to Humana. It was in that same space, in the healthcare HMO space, which is a top performing sector, so we're loving that. Like Jim's pick, I'm going to go back to the 5-year graph, right? Hard to argue with that. Yes, we swooned here in 2018 to 19, but still uptrend, still intact. Earnings are screaming. Price is actually challenging now the 52-week high. So the price action even a little bit better here as I zoom back into 1 year, right? we're failing the retest though, right? So maybe I'll zoom in. Right, we're testing, but we haven't broken through yet. So particularly if I can see the breakthrough and then resistance becomes support to clean up my entry on this guy, the sector's doing well, this company is doing well. I'm liking its prospects. And I didn't open it for a discussion, did I?
That's right,
No.
we can go through them, we'll talk afterwards.
Okay. See, that's why you don't want me to be the MC.
Well, yeah.
All right, Teradyne was my next play.
We're getting close to 3 anyway, so.
Yeah, okay. Teradyne is in the instrument scientific space. Again, another earnings beat, right? So really kind of the semiconductor testing space. So kind of in the electronics tie-in, if you will. Price pattern, if I go back to 1 year, again, in this consolidation phase, pick your poison of where you want to set the bottom of this thing to confirm the breakdown, maybe this prior pivot. But with this price action, it's really hard to use any kind of a moving average or the stop price because the price action is just flattened out. The thing that keeps me liking it is that 5-year pattern for both price and earnings. Right, for the numbers on this guy, earnings growth rate of 15% annually. It's paying a dividend yielding 0.65%. Dividend safety is 98. Sales growth at 7%. So I like the underlying numbers and just need the sweetener of seeing the higher high. But again, I've got some headroom here, right? If I can get that price action to go my direction, I have some headroom before I take out the next high or the prior high. All right, Jim, I think that puts you in the hot seat. Anything you wanted to talk about in particular?
No, I can just quickly comment on each of those. First of all, what was it, Humana you were looking at, right? Mm-hmm. Yeah, again, I look at earnings per share, I look at the overall movement of the stock. Even in that pullback, if people forget, right? We forget in this time of the 20-minute news cycle what happened at the end of 2018 into 19. So I can accept that drawdown in any good quality stock, especially these blue chip stocks that are going to move with the market. People forget, we had a 20% sell-off from October to December of 2018. Then, of course, what happened recently. Over time, the relative safety number is at 1.41. The growth rate is, I can't see exactly what it is, but I know it's strong. This is the kind of stock that we're looking for. This
17%.
17% growth rate. This is the type of blue chip stock that you're looking for. Now, Teradyne is another story. That pattern was choppy as well. We own it, and I actually own the stock myself. We have it in one of our portfolios as a buy right that we've been rolling calls against, trying to get through that drawdown that came through. But I think it's a great stock. Anything with earnings like that, anything with relative safety numbers up in that level are great stocks. So, and same with Kemet, same thing. So I think they're all great picks.
Patrick?
One thing I didn't like with CHE is, I know a lot of guys in here are going to enjoy this one, but the consolidation we're seeing recently, you have the wicked wedge forming, lower highs, higher lows. That makes me a little hesitant to take it right now. I'd wait to see for it to actually show confirmation that it can get out of that consolidation before wanting to jump on board for a longer term pick, because you still have a lot of upside potential if you wait for it to break out. But if you get in now, it breaks the downside, there could be some downside risks that, you could offset it with some options trades, but I'd rather get into a stock that's continuing to start off giving me a little cushion right out of the gate rather than instantly having to be defensive the second you get into the stock.
Right. So you could have a trend line break here, or even if you just use prior this resistance level.
Either one.
Okay.
The Humana, healthcare, it's great. The only thing is, I feel like healthcare just in general as a overall industry or sector even has really taken off due to more news-driven times rather than fundamental, reasons. So I'm a little skeptical of the healthcare sector as a whole, just personally, but chart looks good. You have a nice recovery. I feel like the quick V recovery that you saw with a lot of the healthcare is due to news driven and could be, eventually that news kind of calms down, you see the pullback. So I'd be a little skeptical on the entry right now, just maybe waiting a little bit, see if you can get a better entry opportunity. When all the people buying it off the momentum play leave it, you buy it for the fundamental play at that point. But
Okay.
then the Terra, I didn't like what I saw at the high from the previous high. That sell-off on that high.
This one?
No, from back in January. You saw it spike up and then come crashing back down that same day. That's usually a sign that people, buyer mentality isn't really there at that price range.
What day is that?
January, let's see.
That's right. January's good enough. That's good.
January 23rd. So tells us that, investors weren't really willing to pay that $80 price tag. Now it's trading at 60. You may see it try to retest that point, so you do have some upside potential, but as a long-term play, I'd be careful around that $80 when investors already show that they aren't necessarily willing to pay that price tag for that stock. But I mean, you have great earnings. As long as they can keep that up, great. But yeah, just makes me a little hesitant when I see something like that.
While Patrick's getting ready, I had a quick comment. I want to come back to Michael's question about, or comment about missing the timing. Just so you know, I ran, the beauty of the type of stocks that we're looking at here, these ruler stocks, I ran some quick tests from the March 23rd low, from a couple of days later when that green light buyer came and the primary trend. I mean, listen, ruler stocks are up 24, well, at least a couple of days ago. They're probably up even higher now. 24% since that low, March 23rd to 26th, somewhere in that range. So again, these are great trading stocks. They're good long-term stocks. When the market begins to move up, again, if I had a hedge fund or a mutual fund, all 36 of these would be in my portfolio. That's the key point to all of this, is that lower subgraph, in my opinion. Anyway, sorry, Patrick, I wanted to comment on
Well, and that's
before I forget.
Well, that fits into the market narrative too, right? So part of our concern as investors is, what's the other side of this thing look like, right? We just voluntarily shot ourselves in the foot. What's it going to look like on the other side? Well, I'm looking for companies that can still make money and have a history of being able to make money. So those guys should be able to navigate the waters more easily, right? They have cash on hand in many cases, right? They're larger cap companies, so they can be more resilient to the challenges that they face, versus a small cap company that is a one and done if they run into a financial problem.
That's right.
Yep. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.